Hello and welcome to this training on how to use Right Capital for entering your information during the discovery process of your financial planning journey. My name is Alan Fairber. We've probably talked, and just want to thank you again for choosing us to go through this process. I have helped a lot of people, and I know this is going to be a real good experience and help find ways that we can assist you in saving taxes and setting up your investments and your estate and insurance and all the fun things that we're going to get into. So during this training, I'll show you how to navigate and input your information successfully. When you start the process, you will get an email that looks like this. It says sign up to start the financial planning process. You'll click the sign up, the blue sign up button, and it will have you then enter your name, your email address, and create a password for Right Capital, which is the financial planning software that I use. After you've done that and you get into it, there are main navigations that you'll use to get through this. So there's 7 steps that you can see here at the top, and each step is going to have different cards associated with it. Now, the cards are the actual information that you're going to be putting in. So you can either update the information in the card, you can delete the card by clicking the X if it doesn't apply to you, or you can use a button that's usually up here in blue to add different cards. So the main things we're going to need is definitely you and your spouse, if applicable, the information. So on the first step, we'll start with the client, and you click on that card and it pulls up where you're going to put that information in. So your name, if you want to have a title, suffix, definitely need your birthday in order to do longevity planning and social security planning. Next is the planning horizon. Now, in most instances, I say leave it at 90 years old. We'll plan till that age, unless there's a couple circumstances that you'll want to change that. First is if in your family history, you know that, my parents and grandparents and everybody lives into their late 90s. Then I would go ahead and update that number, put a higher number for the planning. The second is if my family doesn't live very long, um, standard age 87, which is about the average that most people live, 85 to 87, then let's, put that in and we can plan through there. But otherwise, just leave it at 90. Perfect age to leave it at. Under resident state, um, put where you live currently. And then once you're done, you always have to click save or it will not save that information. Then you can go in and put in your spouse's name and information and save that. Now, for estate planning, if you want to dive into that, it's good to put in your kids. Less important to know their birthdays, but having their names especially good to put in there, and whether they're current dependents or if they're adults. And that way, later on, when we're doing estate planning, we can actually link who's the beneficiary of what accounts. And I have a really neat way to take a look and view those relationships and the inheritance process. And so we can give you recommendations on that as well. Once you have at least you and your co-client, go ahead and click next. The next step is your income. So we see here that it's pre-filled salary for me, salary for my wife, and then Social Security. If you're not working and you're retired, you can just delete that out. If you are working, we'll want to put in that income, give it a name, how much you're making. You want to choose the owner, when that income started. So if it's something that's going to happen in the future, you can set that up as well. When it's going to end, and just make a guess. I'd say leave it at 3% on the annual increase. Now, if you work in a special job, maybe with like the railroad or with some other municipality or something that is excluded from Social Security tax, you can check mark it. Very rare that I run into someone in that situation. So just leave it unchecked unless you know for sure that you are not subject to Social Security tax. Then you can check that. Now, if there's other incomes you get from maybe you got a side hustle or there's a pension that's paying you at the moment, an annuity, if you've annuitized or other kind of distributions coming from ownership rights in a company or something of that nature, you can add those as well. Child support, alimony, royalties, all those kinds of things are all available for you to add. Now, there's one thing that isn't here that you might be thinking about, and that would be rental income. Maybe you have a home or duplex or something that you rent. That type of income, we're actually going to be putting in under the net worth section. Net worth is where we're going to put uh, the properties and the assets that we own. When we add the rental property under net worth, there is actually going to be a section for us to add the rental income. So we're not going to worry about that right now. So let's just say this is what we got. Now we have to leave the Social Security section because what the system is going to do is it's going to estimate what our monthly amount will be based on our annual income. If you are receiving Social Security at the moment, then you'll want to click in here, say when I started it, or actually mark that I'm already receiving it, put in the amount you're receiving and the age at which you started receiving it. This is also if you're thinking, I plan on taking it at an earlier date. I'm going to take it when I'm 62 as my plan. And I actually know right here where it says estimated benefit amount, you can say I looked at my statement and I know it's $3,600 a month, and that's my full retirement age amount. Not necessarily the amount I get at age 62, but when I'm 67 and it's my full retirement age, that's how much I'll get. So then the system can then make the estimate. Okay, when you're 62, here's the amount you're actually going to get because it's less because you're taking it early. But we are just going to use an estimate. Just say system, estimate it for me. We'll save that. And we'll do the same for Trisha's. Make sure it shows use simple estimate. And I'm going to change mine back to taking it at 67, my full retirement age. And then I'm going to hit next. So now this is the savings. So this is where I'm going to put in how much am I currently putting away towards saving and my goals. So I have the 401k already pre-put here. So I put in the 401k. I'm putting in 10%. I'm the owner. It's a percent of salary. Or if you're maxing out your contribution, you can just change it to that. So you don't have to type in the numbers. It will automatically just put it in for you. But I'm doing percent of salary, so 10%. I'm already putting it in. I am going to keep putting that in until I retire. The match is I get 100% of the first 5% I put in. So that's what the match means. How much? So this would be saying $1, dollar for the first 5% of my salary I put in. Now, sometimes there's going to be a secondary match where maybe they put in 50% or 50 cents for every dollar for the next 2% or whatever it might be. In my case, it's not applicable. And then if there's other ways, if they're doing a flat percentage amount or a flat dollar match, they can put those in. Or if there's Roth. Now, if this is money from self-employment that you're getting, you want to mark that off so that the system knows to not count the self-employed income tax against the match, which is one of the benefits of saving and getting a match, is that match does not get self-employment tax. Social Security, Medicare, That's tax free. That's a great benefit for getting your full match. Saves you taxes in the long run. Okay, once you got that done, you'll save it. You can add any other places you're saving. Maybe you're putting money into an HSA. That is a great thing to do because that is also triple tax free. No federal tax, no state tax, and no uh, employment tax, Medicare, Social Security. So this is great. So let's say I'm putting in $2,500 a year, and I'm going to be increasing that, say 5% per year. And the company puts in $1,000 for me as well. So I'll put that in, save it. Once I've had put in all of the locations that I'm saving money towards, then I can hit next. Now, this is where you'll put in your accounts, your properties, any insurance that has cash value, um, or actually any insurance at all, so that you can put in your term life, your whole life, and we can look at those umbrella insurance if you have that. So we can make sure that you're not overinsured and overpaying or underinsured and have some risk, um, potentially catastrophic financial risk if something were to happen. Now, there's two ways to do this. You can either manually add it by clicking this add account. Say, I want to put in my bank account. I have a money market. It's joint America First money market. Put it in the plan. It's the money market. It's a joint account. So I'll change that to joint. And it's got $15,000. Save that. The second way you can add an account is by using the link account. And you click aggregation, and it will then allow you to enter the name of your account you're trying to add. So let's say it's at USAA, and you can click on USAA, and it will allow you to put in your login credentials so that it will automatically pull that information into the system. This is really useful if you have brokerage accounts, IRAs, things that have a lot of different holdings in it. That this will automatically pull it in, and you'll know exactly what your allocation is, and you don't have to enter each and every one individually. Now, if you don't want to link it and you don't want to add it, that's okay. I'll show you how you can upload stuff so that I'll do it for you. So once you've got everything put in, click next. So next is your living expenses and your tax situation. So pre-retirement living expenses, if you click on that, you can just put in an estimate on how much you spend on average per month. Then your tax and fees. So if you marry, filed jointly or separately, or you're single, you can enter that. If you have a local tax, which nobody in Utah does, but if you lived in, say, New York or California, San Diego, places that charge a local tax, you could put that in. And then if you have an advisor right now that you're paying a management fee to, this is where you'd put in the amount of that management fee. You can save it. Now, there are other expenses you can put in, like if you're paying alimony or you have medical expenses, you can put those in as well. Once you have that done, again, click next. And we are to our goals. When you want to retire. So retirement age, put in when you're hoping to retire. Retirement expenses, you can either do a simple and just estimate what you think it might be. If you don't know, a good estimate would be 80% of your pre-retirement expenses. That never hurts to do that. Or you can even do a detailed worksheet and go in and type in each area. So whichever you prefer. So I'm just going to say $5,000 and I'll save that. And this is the annual retirement healthcare cost. This is the average that a person will expect to spend towards retirement health care costs. So this would be your premiums, this would be your out-of-pocket expenses. This is the average. If you know a different number, then you can change it. Otherwise, leave it. And the last one that's here automatically is the long-term care cost. So this is the average that people pay during their retirement years for custodial care, usually in the home or out of the home. This is the average. And so the system will automatically use this number for the last year of your life. If there's other goals you want to put in there, a certain vacation you want to do, a property you want to buy, gift you want to give, a legacy you want your kids to get from you, or a charitable donation legacy, or some other type of goal that you want to accomplish, you can add that card as well. Just make sure that when you subtract that amount from your monthly expenses so that the total month to month amount you're spending is where it should be. Okay, once you get this section done, the last section is the vault. So this is where you can upload, and one of the things I definitely want to see is your most recent tax return. So you want to upload your tax return. This is also where if you have statements for accounts that you don't want to link or do the manual data entry for, upload your statements into this, and I'll make sure it gets done for you. And you put any other documents that may be needed, insurance documents that maybe have special rules or annuity information, pension information. This is where you do it. Once you have all of that completed, you'll click this complete button. And what that will do is it will then notify me that you have uploaded all the information, and I'll start reviewing it and I'll prepare for our next meeting where we'll dive into the details, answer, get any questions I have about your situation answered so that I can really do a really in-depth job of analyzing and coming up with some good recommendations for you. Of course, don't hesitate to call me, email me, text me if you run into anything. I'm available and we'll call you back within 24 business hours if I'm really busy, or sooner, usually, to make sure you get taken care of. Thanks, and we will talk to you later. Take care.